Hi there, I'm Ken Majmadar, and in this video, I'm going to talk about where to invest money to get good returns. I'm recording this video right now in September of 2020, and the challenge right now, as has been true for many years, but it's very acute right now, is that interest rates are very, very low. We just went through the global pandemic. It's actually still going on. And as a result of that, the interest rates have been driven down to very, very low levels. The 10-year treasury is yielding below 1%. And what this means as a practical matter is that savers or conservative investors have a very tough time earning anything worthwhile on their cash or savings or their investments. In fact, nobody knows for sure, but interest rates are so low that I think in many cases, if you're a very conservative investor, you're going to earn less than inflation. Now, just as a quick primer, inflation is basically prices going up, right? So we all know that over time, what was the price of milk at 20, 30 years ago? What was the price of food? What was the price of rent? Whatever those prices are, over time, they go up. Whereas if interest rates are below the rate of inflation, then over the long term, investors and savers are guaranteed to lose out. This also hurts people like people on a fixed income. So, for example, Social Security doesn't necessarily keep up at the rate that prices go up. Or if you have a pension or an annuity, it's very likely that over 10, 15, 20 years, the value of what you can buy from the payments that you get from your pension or annuity can also go down. So this is really a big problem and a big challenge for people. And so the question in this kind of a low interest rate world is, where can you invest money to get good returns and good income? And I run an investment firm called Ridgewood Investments. I founded it around 18 years ago. We have offices in New Jersey and in California, and a lot of the work we do with our clients and investors is to help them earn better returns on their investments. So where do you get better returns? Well, there's a few areas that we like here at Ridgewood Investments, and I'll talk about each one and explain each one and sort of the pros and cons of each one. So the first area that we, of course, a little bit better than cash is bonds. So what are bonds? Bonds are loans that investors make to different borrowers. So if they're loans to governments, then those are called government bonds. And that's what I was talking about, the 10-year treasury. So if you loan money, dollars, to the U.S. government for 10 years, you earn less than 1%. If you loan it for 30 years, it's still a very, very low rate. It's probably, around 2% or a little less. I haven't checked the latest. So still extremely low, probably lower than inflation. But then you have other kinds of loans. You can loan money to corporations, and those earn a little bit higher than most of the U.S. government loans. You can loan money into different kinds of pools, mortgages, and things like that, and those have a little bit higher rates. So the fixed income or the bond markets are very, very large, and within those, interest rates across the board are very low, but there are some areas of opportunity. If you look on our website at ridgewoodinvestments.com, we have a whole section called Insights. And in that area of the website, I write a lot of articles about different topics, and I've written about the topic of generating income on your investments. You may want to check that out. So bonds is one area, and across the board, there are some better things within bonds, but overall, the rates are low, so that's probably not your answer. But bonds do have one virtue, which is that depending if you pick the right bonds, overall they don't fluctuate as much as stocks and other areas do, which we'll also talk about. So there are definitely some areas within the bond markets, but bonds, typically investors invest in bonds to earn some fixed return. It's usually low in today's interest rate environment. And they also invest in bonds or fixed income for safety, because those types of investments tend not to fluctuate as much in the markets as other types of investments that generally also generate higher returns. So between bonds and stocks, there are these in-between securities. For example, one area is called convertible bonds, another area is called preferred stocks. They're just two sides of the same coin, but I'll probably record other videos on those topics, but those are hybrids. So those people that are saying, hey, bonds are a little too low, maybe I don't want to take full stock market risk, you can look for opportunities in areas like convertible bonds and preferred stocks. But another area that we really like is equity investments or in the stock market. So actually the last 10 years since the last financial crisis, with some ups and downs, the stock market has done very well. More recently, there's been a lot of activity or excitement about certain technology companies, so those have been doing quite well. But the great thing about the stock market is that it allows you to become an owner, and I want to make a couple of points here. So some people think of the stock market as gambling, and in the very short run, if you're a very short-term investor or short-term thinker, then investing in stocks can be analogous to gambling, but in reality, it's not. The stock market is a market of pieces of companies. So it's ownership interests in businesses. That's what the stock market is really about. And it's about taking savings and channeling it through the medium of the stock market to be used by managers and entrepreneurs to create productive value products, services that society needs, and that people vote whether they like them or not, with their own dollars. And so that's what makes the whole market. But in the aggregate, the stock market is not a casino. In the aggregate, the stock market is a way for regular people to own pieces of great companies. And sometimes I give talks about, like to groups that have 401k plans just to educate, because we really like to take an educational oriented view to helping people. And I always explain that don't think of the stock market as a casino. Think of it as a way that regular people can become owners. And if you look at what do you want to be, a worker or an owner, I think if you look from a long-term point of view, the owners are the ones that do better than the workers. And there's a reason for that. Better in the sense that they get to compound their money over time so that they get leverage on more than just their individual time. Of course, the beauty of the stock market is that everybody has that opportunity. So any worker, to the extent that they save, and hopefully you would check out my other video on how to save and how much to save, which is also in our Investing with Ken Majmudar YouTube channel. But once you save, then the ability to invest in the stock market is open to everybody. Anyone, even with $10, $50, $100, they can start to become an owner. And, there's all these great companies that we all know and use, companies like Google, McDonald's, Facebook, Starbucks. I could go on and on, Microsoft, Apple. And that's just the tip of the iceberg. There's so many more. All of these companies are publicly traded. So a lot of the really big, important companies in the world are publicly traded, and their shares are usually relatively inexpensive. As you saw, Apple and Tesla, the price of the stock got sort of high, but they just split those shares. In one case, 4 to 1, in another case, 5 to 1. So pretty much anybody with even a few $100s, they can afford to invest in the stock market. And what a lot of people don't realize is that, if they work somewhere, for example, if you work for the state or you work for an educational institution, if you work for a place that gives you a pension, like teachers and stuff, the policemen, firemen, etc., there are big pension pools. And so while they may not know it, their employer is putting away a certain amount of money into these big pension pools, and those pensions are investing in stocks on their behalf to give them an annuity income down the road, and stocks and bonds and real estate, which is another area that I'll talk about. So it would be a mistake to overlook the stock market. It's an opportunity for anybody to become an owner, and over time, if you do it the right way, ownership gives you dividends, which is a share of the profits that the company that you own are making. And then it also gives you an opportunity to increase the value of your investments through the benefits of ownership as your companies and your managements work to create products and create success in the market. Of course, not all of them are going to succeed, but many can succeed. And as they succeed, then that actually gives you an opportunity as an investor to succeed along with them. So, of course, knowing how to do it, there's all kinds of different options in the stock market. But the stock market is an important answer to this question of how do you generate income through dividends, and how do you generate returns in such a low interest rate world. So another area, so we talked about bonds, we talked about hybrids like convertible bonds and preferred stocks, and we've talked about the stock market, which is actually not gambling, it's actually ownership of businesses. So the other big area that I want to talk about that we're quite active in at Ridgewood Investments is real estate. And of course, there are publicly traded companies that own real estate, but at Ridgewood, we like to actually own private income producing commercial real estate. So what we've found is we go to different real estate operators, developers, and we find projects, apartment buildings, usually multifamilies are a good stable area that generate income and give good returns over time. So we've done a number of different investments in areas like Atlanta, in Texas, and even in multiple other areas. And we've found good income and good returns by investing in commercial real estate. So when I say commercial real estate, I'm talking about multifamilies that have, 100 plus units. Now, obviously, those are big enough that, many of them will sell for, $10 million, $20 million. And of course, you do get to borrow some of that money from the bank, which is another benefit of real estate. And there's really good tax benefits and really good income benefits. I'd say one of the biggest differentiators between stocks and real estate, other than one is an ownership of a business and another is an ownership of a physical property. And so that tangible aspect of real estate often appeals to a lot of people. The other big difference is that when you buy real estate, you actually can usually borrow money from a bank because the real estate asset is considered fairly tangible and secure. So banks will loan you, 70-75% of the value of real estate you buy. So if you buy the right real estate and you hold it long enough, not only can you generate good income through the distributions that you get from the rents that you collect after expenses, but also you can generate great total returns. Because the debt cost right now, that's the flip side, is if you're a borrower on something like real estate, interest rates on real estate are very, very low. And so that the low interest rates ends up being a benefit to you as a real estate investor or purchaser. So what we've actually done is, instead of investing only in publicly traded REITs, which have much lower yields, we've actually helped our clients to aggregate and look for opportunities to buy pieces of big buildings in partnership with other clients. And so we really like real estate. Now, obviously, some people do real estate on a small scale where they buy, a condo, or they buy a one-family house and rent it out. And while there's nothing wrong with that, doing it on such a small scale definitely has drawbacks. I've noticed that a lot of people that do these very small scale real estate, they really overestimate the income, they overestimate how easy it's going to be, they underestimate the cost, and so they end up speculating on the increase in price of the real estate, which is not something we want to do. So what we like to do is buy bigger assets, again, in a partnership together with a bunch of different clients. Most of these assets will throw off distributions right away within the first quarter and then keep going. But then we have some kind of value income improvement plan in place, so that which we try to implement usually over the 1 to 3 years, the first 1 to 3 years of our ownership of a property, and increase the value that way. So that way we can increase the income, increase the total returns, and offer a pretty attractive kind of total profile. So, of course, there's other areas. I'm going to do another video on gold versus Bitcoin, two areas that I'm kind of, I know a lot about. And so I'll do another video on that. But I would say that, to go back to our main question of where to invest today to get good returns, to me, two areas that everybody should be looking at and considering are ownership of businesses through the stock market and ownership of income-producing real estate on a bigger scale that will throw off income. So I think both of those areas are very good, and I welcome comments and questions. Please check out some of our other videos, and we're going to be publishing content all the time. If you have other ideas of topics you'd like to see us cover, leave a comment below or write to me, info@ridgewoodinvestments.com. Thanks a lot. Take care.